Okay, folks, if you guys would be so kind, give me a audio check confirmation on Twitter, please. Echo Bravo. Thank you for that. Okay, I do believe I figured out why we were always losing audio on our live sessions. And I went out and bought myself a new mic and all that, thinking it was um, limited to hardware. While I did have a failing mic before, my software program that I'm using, I have it set up as a hotkey. And the hang on one second. The platform that I use to share and live stream with, they allow you to set up hotkeys. So that way, if I want to mute, I hit a certain key, I program it as that's my mute button, and I have it set as a space bar, which unfortunately is the same way I toggle through PowerPoint displays. I hit the space bar. So today we're going to be doing something a little differently. I'm going to be using the page down key to transition from one slide to the next. So we're going to be able to redo the presentation we had last night, and we'll do some further commentary that I wasn't able to include last night. Okay. I'm seeing a lot of you guys say the volume's low. The microphone is all the way up on the settings, and I'm actually talking louder than I usually do. So I'm not sure how I can overcome that. I don't want to scream at you the entire time because I'm already raspy as it is. Alright, so let's take a look at our teaching. Okay, and I just want to confirm audio one more time before we begin. One more audio check, please. Thank you very much. Alright, so we are going to cover intraday price templates. Now, the template is more or less like a roadmap or a thought process that goes through my mind based on what the price delivery is going to be for that particular day. Now, the central bank is the one that sets uh, the pricing. Okay, when we have trading, for instance, for folks that are trading in FXCM or Oanda, okay, or any other brokerage firm that you may trade within. If you're not trading through a prime broker, you're trading through a derivative of the price feeds that are offered on the interbank market. Some brokerage firms will claim they have the actual the same feeds that are being tossed between the banks. I'm not going to argue about the validity of that because frankly I couldn't prove it one way or the other, but I can tell you just looking at the platforms that are available in the retail world, you're going to see a disparity between highs and lows. No matter what time frame you're looking at, they're never going to agree on the exact price. So to me, um, you're going to have to allow some certain um, gray area in these templates, and I failed to mention that last night. But overall, there is 6 general templates that Price Action uses on creating, or as I teach it, engineering the daily range. Now, the daily range is the open, high, low, and close on a daily chart. Okay, so if you're going to be a day trader, the premise is you want to try to capture, hopefully, the direction of the move for that particular day. If it's a bullish day, which this teaching, like we were doing last night before the audio issues plagued me, we're focusing primarily on the buy side only. Now, before you get scared and thinking I'm trying to hold something back, it's just for time's sake. Everything that I teach, if you reverse every individual template, just if you go into, like for instance, if you go into MS Paint on your computer, okay, you can take these templates and just invert them. In other words, just reverse the image, and that's what you'll have for the sell scenario, okay? But the idea is stay on one side of the marketplace, learn the templates, okay, and study them. So everything I'm going to share with you here today, like we did last night, but you missed some of the audio, you're going to be able to go in your own charts and study for at least 30 days. Go back over the last 4 weeks, go over the entire month of March, okay, and pick one currency pair. And based on what I'm sharing here in this presentation, I want you to classify and label basically the price action that took place each individual day. Every single trading day will fit one of these 6 criteria. Okay, there's always an application of one of these 6 to any market condition. Now, that doesn't give you show me when to get in. Okay, so if you're here to learn show me when to get in, the template is only going to be an aid to you understanding, or as I use it, it helps you anticipate what the daily range may unfold. In other words, what is the probability of certain characteristics of this individual day, what phenomenon should take place, and when should it take place. And here's an important thing, why it should take place. Okay, it's not enough to understand that the market should go higher, but think about it. I mean, folks can be bullish on euro. They believe euro is going to go higher against the dollar. So just because they have that premise that they're bullish on the fiber, does that equate to them actually finding entries to get in and be long? If you're a new trader, you know what I'm talking about. You're probably struggling there. You got an inclination or a feeling, okay, that this pair is going to go higher, but you don't know how to get in. So these templates are going to help you formulate an idea based on context of the marketplace, which is what we're going to talk about individually as each template is shared. So I'll spend a little bit more time than I was unable to do last night, and give you some insights on when to anticipate the individual price templates that we use for day trading models. But they're not limited to just day trading. So while they are primarily aimed at giving you a greater understanding on how the central banks formulate the daily range, and yes, in my opinion, they are absolutely predetermined. In other words, they know it's going to be a higher close before the market even starts trading, and they as the central bank. Think about it. When you trade, and you're trading through a retail brokerage firm, who's the market maker for you? Who provides that marketplace for you to trade? The liquidity pool provider that you trade within, the house, okay, or FXCM or Oanda, okay. But they get their pricing from the central bank. So really, who's the market maker? The central bank. So I understand there's a lot of things that we can study and I teach that are limited to retail focused principles. But you have to go beyond that and go beyond institutional view and go right to the source, which is the central bank. Because the central bank is a storehouse, they're controlling the overall price model that creates the daily range. Yes, there's going to be short-term static that's generated because of news releases. It could be a geopolitical event around the world, a war event, a terrorist attack, anyone.